Every cycle has its winners and losers. People are suggesting it's still possible that we may be able to slow down the economy and rein in inflation without tipping too many people over the edge. And that's what you have to hope for.
Do you think it's fair that when inflation is doing what it's doing at the moment, that the people who bear the brunt of repairing the inflationary spike are people who borrowed money to buy, say, a house or borrowed money to run a business?
It's a really, really hard one. I will say that markets have been quietly suggesting that the Reserve Bank was wrong for a while. They've been pricing in much higher interest rates for a long time. They were way ahead of the RBA. But that's true of global banks as well. That's not just the RBA. In the US, the Federal Reserve was saying that inflation was transitory, and it clearly wasn't, and markets knew that rates would have to rise. It's true in every cycle that it's the last borrower who ends up paying the price.
Pass the parcel.
It's past the parcel, and it's tough. There isn't a prize at the end, right? It's really unpleasant, and it's so hard for people. In every cycle, it's those who had to borrow the most at the end to pay the most for property prices usually, but other asset classes as well, who will wear the greatest cost, and that's really difficult. There will be retirees watching and listening to this who say they've paid the price for the last 10 years because their cash has earned them nothing in the bank.
That's true.
So every cycle has its winners and losers. The challenge is how the RBA gets us through this. If they can engineer a soft landing, it's a challenge. People are suggesting it's still possible that we may be able to slow down the economy and rein in inflation without tipping too many people over the edge. And that's what you have to hope for.
Globally, investors love Australian mortgages because they just outperform every other mortgage in the world, and they have done for the last 30 years. Our arrears and delinquency rates in Australia relative to the rest of the world are like dream time. It's so good. We are so good at protecting our mortgages as individuals relative to the rest of the world. And that's got a lot to do with our psyche about, this is my home, I've got to protect it no matter what. And this has been sort of delivered to us from our parents, from our grandparents. But over the last few years, we've got a cohort of people in this country, say from 20 to 30, who have probably taken the position that they're never going to be able to afford a home. Is this an opportunity perhaps that all those doomers, not the boomers, but the doomers, who felt as though they're never going to get into the housing cycle, never going to buy a property, and basically therefore have dismissed it? Do you think this is an entry point for those individuals? And what would you be saying to them? Should they be paying attention and maybe starting to save a deposit?
I hope that challenge for young people changes, right? It's not equitable. It's not fair. The ultra low rates that we've had have led to what they call an everything bubble globally. And it has meant that those who own assets have become far wealthier, and those who didn't own assets, who are usually young people, have become less wealthy on a relative basis. And you need to remedy that over the long term, right? That's not okay. No one wants their grandchildren to be much poorer than they were at the same age. That's not cool. So we do want to see it change. I think it's perhaps a bit early if you're a young person to jump into the property market. In Sydney, you're only talking prices off a few percent. It's not like they're down 20 or 30.
It's been like 1%, 1.5% a month or something like that, along those lines.
It's pretty marginal at this point. And given they jumped 30% in 18 months, that's not enough to make you suddenly super wealthy relative to the next buyer. So it's a great time, I think, to start saving and thinking about this as part of your future. You don't need to rush in. And that's a good thing, right? FOMO is terrible in the property market. It's dreadful. That's when people massively overpay, particularly at auction. You do have time on your hands as rates rise. You've got plenty of time to watch how this play out. And you can save during that period. As rates rise, you also get more on your interest. So you can put some money in the bank, put some money aside, start saving, keep looking around, see if you find a bargain. It'd be wonderful.